Today on the show over the next half hour, joining us will be Neeraj Diwan, Director Quantum Securities, to assess us through the fundamentals, and on the technicals we'll have Ashwini Gujral, Fund Manager at ashwinigujral.com.
The big news, of course, for the day remained the DMK's threat of pulling out, and that's why you saw Nifty almost slipping to 5750 during the day. Of course, we'll be talking all of that with our guests on the show. Mr. Neeraj Diwan of Quantum Security joins us on the show right now. And of course, Ashwini Gujral will be there to discuss how the charts look of some of the key indices along with the top stocks which are dragging the markets down. Neeraj, come to you first. From the fundamental point, today's market was down very sharply. We are testing new lows almost, and some of the large stocks like Bharti and BHEL are at multi-month lows now. How are you judging the situation which has suddenly erupted in today's trade as far as the DMK's threat is concerned?
Yeah, good evening. Yeah, I think market is going through a lot of volatility, which is anyway not too good for the markets and for the investors and the traders in the market. And all of a sudden we got this Cyprus news first over the weekend, and now the DMK news. And then the RBI policy today was also almost as per expected line, no surprises today. So I think market is going through this turmoil, and DMK news coming out of the blue has also jolted the market. But I think that should be more of a temporary kind of a thing, which looks like there should be a solution for this very soon. But the market did have an impact of the news, and there was a knee-jerk reaction today. But I think the more carefully we should watch is the global news. I think that news is something which can have a little longer lasting impact if it is not solved or tackled in a proper way right now. So I think domestic, definitely there is some concern, but I think that should be short-lived.
Ashwini, how would you advise investors whose feathers have just been ruffled on the back of this news, plus a lot of negative global news coming in, because we cracked below some psychological levels on the downside for the Nifty? Do you think now the worst is priced in?
Well, that's always difficult to say. All I can say is that relative to 6100, we are at a cheaper level. So which means if you were interested in buying at 6100, I think today, in this 5650, 5750 zone, I think the risk reward is tremendously in your favor. And markets are about sentiment. One day sentiment is good, 15 days later it's bad. Then the next 15 days it again improves. So today, given this kind of sentiment where Cyprus and DMK, etc., all these adverse news flows are out there, I think the prices are low enough from where you can hope to make a trading gain, even if the market remains choppy and remains sideways. So if your favorite stock like Yes Bank is $100 lower, I think this is a very good time to get into positions, and that's what we have done today.
Ashwini, but which side do you see more compelling trade from here on after looking at today's fall, and the attempt to recover was actually not very positive for the bulls? You think that still on every rise there's a compelling case of shorting?
I said we are buying, so there's no case for shorting at these levels. The idea should be that as long as 5650 holds on, we have to expect that we are in some sideways move from 5650 to 6100. Around 5650, 57 we buy. Around 5950, 6000, 6050, those are the levels we sell into. So right now you need to buy. In case 5650 starts getting violated, which will probably be the end of the quote-unquote bull market, only then you would start to short on every rally. I think you should short only at higher levels, not closer to 5700, because chances are that after a few days of consolidation, the market could recover from here in case certain things become positive.
Neeraj, today's political controversy certainly overshadowed the RBI credit policy. But let's talk about what you made of that, because the general assessment that we got is while there were certainly no surprises, there was no comfort either.
Yes, the kind of statement that we heard from the RBI that there's no room as such to ease the monetary policy any further. But I think they had no choice rather than make that kind of a statement, because the 0.25 cut was expected in the market, and they went ahead and did what mostly everyone was expecting. And they couldn't do more because they don't have the, they don't have the leeway right now. We're seeing the kind of food inflation and the kind of inflation figure that been coming. So I think seeing the food inflation at such high level, they had no choice but to make that kind of a statement. But I think we need to understand that, are we entering a phase where we'll see lower interest rates going ahead, lower inflation going ahead or not? The moment we get this kind of a comfort, or this kind of a comfort from the RBI policy and the inflation figures, that is where I think we'll see the major turnaround happening. So I think right now we are still in the middle. We can't really make a case of that RBI going ahead and again obliging us in the next monetary policy, because even they are not so sure of how the things will pan out. So I think they didn't have too much of a choice other than making this kind of a statement and doing a 0.25. So it was more or less an expected line, and there wasn't too much expected anywhere more than that.
Ashwini, a lot of stocks are making big moves, but one stock which stood out on the downside today, of course, negative news coming in. 2G Special Court has taken cognizance of the Vodafone Bharti charge sheet, and which also entails the summoning of Sunil Bharti Mittal on April 11th. How did you really see the fall in the stock? Went down to almost 7%, recovered some ground. How does it look on the charts?
While I don't think summoning is that big of a deal, but the stock was showing weakness even before this news came up, and today it's had a breakdown below levels of 300. It made a bearish head and shoulder, and the target of that is probably 245 to 240. I think maybe some other stock may benefit. We've seen that when RCom was in trouble, Bharti benefited by outperforming. So maybe its ideas turn to benefit from Bharti's misery. I think once controversy hits these sort of stocks, the telecom majors, we've seen them underperforming till their names are cleared.
Neeraj, wondering if you track the movement of the currency, because the rupee was certainly in focus today, coming close to its 3-week highs and then seeing a major U-turn and surpassing those levels of 54. Which way do you see the currency headed? Because some brokerages even say that 56 could be the worst case scenario.
Yeah, I think for some time we've seen rupee still in a narrow range. It's not given too much of a breakout on either side. So I think I don't see rupee going to 56 kind of a level, but I think definitely between 53 and 55 is the level where I see rupee being for some more time, because till we get some more clarity as far as what further reform measures government is taking, because the finance minister has had suggested that things will continue even after the budget. So I think you will see how money inflow is going to get impacted going ahead. So right now I think there is more of a stagnation there, and rupee should still be in a range for some more time.
Neeraj, what did you make of the policy? Because after the DMK news hit the markets, the entire policy today almost became a non-event, and even the managements of several banks went on to say that they would have very limited room to pass on this particular rate cut. How do banks stand fundamentally in this light?
I think though no one was expecting more than a 0.25% kind of a cut, but definitely there's a liquidity pressure that is there because of year-end pressure, which normally we see every year the banks face. But all said and done, I think most of the negatives I think are already priced into the banking stock. So I don't see too much of a correction happening in banking stock, barring a couple of names here and there, which will depend on how the results pan out. But even if you take a larger name like State Bank of India or a PNB, I think most of the negatives are already priced in, even in the PSU bank. So I would make a case that all the disappointment or all the dips that we see in the banking stock is an opportunity to build up your portfolio as far as the financial stocks are concerned, which I feel over the next 1 year can perform very well. And no one will really get a clear indication when we'll see a clear trend of interest rates coming down and inflation also coming down. We will be already into the cycle when we get a clear feeling, and then the stocks would have already reacted. So I think seeing the kind of negatives which are already priced in and the price action which the stocks have seen for some time, I think it's a good level to start making a portfolio with the financial stocks also a good part of it.
Ashwini, you mentioned that this would be a good level to pick out some stocks given the low valuations, but would some of the beaten down infra names like a Lanco or a Punj Lloyd or a GVK fit into that bracket, or you'd still steer clear?
See, these stocks didn't do well even when the market was moving higher. So again, on a trading basis, you can do your trades for the next 10-15%. But I don't think these are great stocks to get into for the long haul. I think when you have quality stocks coming down, when everything is getting painted with the same brush, I don't think infrastructure is going to pick up for a while. Its time will come, finally the capex cycle will pick up. But I don't think right now is the time. You could much better, you'll be much better off getting into autos or private banks or even tech stocks, things which have low leverage in a high interest rate environment. Wherever there is low leverage, that tends to outperform. So even defenses would do well in this environment.